Morning, everybody, and welcome back to Money Multiplier with Kim. Today, I have three guests from One Trust Home Loans that are going to talk to us about solving retirement challenges using your home equity. You want to stay tuned for this valuable information. Good morning, everybody, and welcome back to Money Multiplier with Kim. Today, I have three guests from One Trust Home Loans, and they're going to talk to us about solving your retirement challenges using home equity. So I want to introduce these guys. The first one that's here with us today, his name is Hank Sanders.
Hi, good morning, Kim.
Good morning, Hank. We have Brian Fitzpatrick.
Good morning, Kim.
Morning, Brian. And we have Richard Eakins.
Good morning.
Good morning. Thank you guys so much for coming on. I appreciate it. So as I said, today we're going to be talking about solving those retirement challenges using home equity. So why don't you guys tell us a little bit about who you are and what you do for One Trust? So why don't we start with Hank? You can go first.
Absolutely. Well, nice to be with you, Kim. Thanks for having us. Hank Sanders. I've started in the financial planning space right out of college in 1986, so about 3 decades as a wealth advisor, financial planner, a few different business models. Finding out now that it was a little unusual, my track as a planner, and then that I learned how to incorporate real estate and home equity, liability management into comprehensive planning. About 7 years ago, I had a chance to sell my practice, and I started focusing with a group on how to help other professionals, financial professionals, advisors, CPAs, attorneys, and then my colleagues that are here with us today, how to bring in holistic planning where you're using housing wealth as part of an integrated comprehensive plan, and specifically focused on this retiree demographic. And so we've been on that message for the last 7 years, and glad to be with One Trust. We have built really a platform for financial professionals by financial professionals. So we come with product agnostic, right? We have a blank sheet of paper. We offer everything, but we do have some special wisdom and skills around loans that are specifically created for the folks that are entering into or already in retirement.
Yeah, thank you so much, Hank. I appreciate that. It is definitely retirement is a big topic of conversation, so it's important to have that information. Richard, why don't you go next?
Thank you for the opportunity to meet with you and be on your show, Kim. I know that you're highly influential in your space, in the financial planning space. I'm deeply appreciative, as are we all. I'm Richard Eakins. I'm a loan officer with One Trust Home Loans. I've had many years in telecommunications, but the last 20 years I've spent working with retirees and seniors, their families, and their counselors. I'm a licensed loan officer in many states, and One Trust does business in all 50 states and several territories. We're part of a financial holding company that also includes insurance, banking, software development, credit repair, and so forth. So we're a major player in the financial industry.
Thank you, Richard. I appreciate that. Next, we're going to introduce Brian Fitzpatrick. Hi, Brian. How are you?
Good morning, Kim. I'm great. Thank you for the opportunity to have me on, as well as Hank and Richard. I am the Regional Vice President for One Trust Home Loans. I'm part of the 55 plus division, but on a larger scale, the company provides all types of lending whether it be traditional, conventional, FHA, VA, USDA, as well as portfolio lending, where we have a complete array of products that we can offer anybody on a commercial side. We offer doctor loans, but more importantly, I'm part of retirement lending, and I'm very excited about talking about that because there is a little bit of a crisis in America today in reference to for retirees. So I'm very much looking forward to the opportunity and talking more about it.
Thank you so much, Brian. And I agree with you. It is definitely on top of mind for people now about retirement. So many things are changing in this world, and retirement income is on the top of people's minds, and it's important to be able to know where you're going in that direction in order to be able to be prepared when that time comes and be able to retire. So I want to thank you so much. And, it's obvious that there's a lot of experience on this call, and you guys have a lot of knowledge that you want to share with us. So why don't we just get into it? So the first question I wanted to ask is, who would you like to reach with this discussion? What demographic are you guys looking toward to connect with in order to, be able to share this information? I know you talked about retirees. So, give us a little more information about who you're looking to connect with on this call.
I'll take the first cut at that.
Okay.
We're really looking at three sets of people when we talk about the retirees in the audience we'd like to reach. First of all, we're talking about people who are 55 and older, who are anticipating retirement, are already retired. We're also, and those are homeowners that we're talking about. And we're also interested in speaking to financial advisors of all types, such as yourself, financial planners, CPAs, CFPs, insurance salespeople, and so forth. And third, we want to address the families and friends of these retirees, because frequently they're helping to make the decision. And furthermore, oftentimes they're financially responsible for some of these retirees and seniors. So those are the three groups that I see us addressing.
Great. Yeah, and I can understand that too. I do a lot. What I do is dealing with family members of older people. So, they're not able to make those decisions on their own. So it's easier to have family members or people like yourself to guide them in the right direction, which is extremely important, because it's hard to make decisions without having that information from different people, or having the support from family members to be able to reach out and get that information properly. So, all right, that sounds great. So what are the general retirement concerns that you see, and why is that relevant?
Let me start out with a couple of statistics. First, there are between 60 and 65 million Americans 62 or older. That's a huge population, and 10,000 people turn 62 every day. Furthermore, just as a reflection of our current economic situation, about 1 in 6 retirees are considering going back to work. That tells you something or other about our ability to save. The average savings of a retiree is about $280,000. And that might sound like a lot of money, but when you look at the median, which means half of the people, half the retirees have more and half have less, the median is actually $88,000, according to the and then according to the American Council on Aging, the cost for things like long-term care is pretty darn high. In the state of New Jersey, it can reach as high as $150,000 for skilled nursing. The good news, though, is that among those retirees, there is about $11 trillion worth of home equity that these retirees can tap. Some of these people clearly have some savings, and their strategies and their needs can be addressed by a lot of the things that Hank will talk about. He's our leading intellectual in terms of understanding these strategies for these people. But the rest of the people are more needs-based, and we see a lot of opportunity with those folks as well. Now, getting back to your question, what are the concerns of these retirees? Well, first and foremost, I think they want to know that the money that they have is going to last a lifetime. And clearly it isn't. If you look at $88,000, that's not much. They also want to know that they have funds to deal with emergencies. And in some cases, they want to be able to maintain their current lifestyle as well. So in addition to simply knowing that they have enough money, they're concerned about the lack of long-term care insurance and what would happen to them in the event that they have a long-term care need. They're concerned about inflation. We all know that inflation today is on everybody's mind. They're concerned about rising credit card payments and rising home equity lines of credit payment. I got a call the other day from a woman in Philadelphia. Her home equity line of credit is probably around $100,000. And she told me it's gone up $275 in the last few months. How can a person on a fixed income afford to suddenly be paying another $275? So there are mortgage products I'll describe a little bit as we go along. But ultimately, these people need some peace of mind. They want to age in place, and they want to know that they've got the resources to do that.
Great. Thank you so much, Richard. That's amazing. I know long-term care insurance is very expensive. People haven't prepared for it. People haven't really prepared for their retirement. So not having these plans in place gives people, they're nervous about not having money if they have to go into a skilled facility. And like you said, those costs are rising like everything else around us. So we need to show people how to be prepared in case that situation arises. So
Right.
that, that information is extremely valuable to a lot of people. So great. Thank you, Richard. I appreciate that. So what
Kim,
are the solutions that you offer and how do they enhance the retirement of seniors?
Kim, before we go there, just to add
Sure.
to, if I may, add to what Richard was saying, we take a look at the 55 plus is that number that we're talking about, and today there is an increase in that population that faces many challenges. For example, cost of retirement is 2.5 times the average home, and 81% report not knowing how much they actually need for retirement. So really at 55 is really the age is when you start thinking about retirement and how am I going to get there. Nearly 50 million 55 plus homeowners, 50 million of them, 62%, they lack sufficient retirement savings. 70% expected to need some type of long-term care services. And that cost is rising. So we're here, to Richard's point, is really how to leverage home equity in your retirement future and how that's going to look. So there's a lot more studies out there, but like I said earlier, there is a crisis in retirement. Cost of living is going up substantially. But at 55, we feel that is the time to really start looking at your portfolio if you have a portfolio, and if you have enough in retirement. And I know Hank is going to go over that later in the segment, but I just want to add those facts and those points out.
Yeah, the numbers are staggering. It's crazy to understand that there's so many people that have not prepared or not ready if this situation arises and they have to be in a facility. And like you said, the inflation is out of control. The cost of everything is up. And, I work with a lot of people that are on fixed income. So to have an extra $200 a month is a very big deal for those people. And then they, how are they going to survive paying that extra money? So having these solutions is invaluable to some of these people that really need it the most. So, all right, that's great information. Okay. So now let's go into what are the solutions that you offer and how do they enhance the retirement of seniors?
Well, we offer several solutions. The primary product that we offer is the Federal Housing Administration, or FHA, Home Equity Conversion Mortgage, sometimes referred to as HECM or HECM. and I wasn't clearing my throat. They do call it HECM. This product from FHA was signed into law by Ronald Reagan. It was meant to supplement the three-legged stool that they talked about back then, where the three legs were pension, savings, and Social Security. Well, we know what's happened to pensions. Only about 20% of Americans have pensions, and savings are increasingly difficult it's increasingly difficult for people to save. So we offer these products, including a proprietary product, which operates very similarly to the FHA home equity conversion mortgage in many respects, but may cover properties that are more valuable or properties that FHA does not approve, such as certain condominiums. But we have both of those products, but the primary one is the FHA home equity conversion mortgage. The distinguishing characteristic of all of these products, however, is they allow a homeowner 62 or older to draw a portion of the equity from the home to live on or to use in any way they want to use it. The key to this, unlike other products like a home equity line of credit, is that there's no requirement to make monthly principal and interest payments. So, for example, if somebody has $1,000 a month payment and half of that is going to principal and interest, that's $500 a month that they now have to use for other things. Add that up, that's $6,000 a year. In 10 years, that's $60,000. That's a remarkably large amount of money just by saving the principal and interest payments. Another characteristic of the FHA product is that most of them come with a line of credit feature. Now, the line of credit is one of the three ways people can take the funds. And the great thing about that line of credit, and Hank will talk about this more because it's really key to the strategy, but the great thing about that line of credit is that it's growing over time. And if the funds aren't used eventually and the homeowner moves out, passes away or whatever, those funds in the line of credit revert to the equity in the property. Let me make clear, people are not earning interest on this. We are, however, growing the amount that a person can draw over time. So those are the most important features of the home equity conversion mortgage.
Kim, if I could add to that.
Sure.
So when we sit down with any individual, wherever they fall along that spectrum of constrained, having to figure out additional options to have a secure retirement, all the way up through the other end of the spectrum to where they're higher net worth, mass affluent type of profiles, where they have maybe several $1 million of assets in addition to their housing wealth. Mm-hmm. We come in with a blank sheet of paper. If you're going to include somebody's total picture, which includes the wealth that they have in their home, well, there might be several ways that would make sense to optimize that unique individual's one life that they're going to get to live. That could mean selling the house to access that equity. It could mean a traditional refinance. Mm-hmm. Richard mentioned, several other HELOCs, things like that. And so, the key to this, I think, with good planners is to come in with no preconceived idea, but to work and do the noble work, I think, of helping that person, that family, figure out the best solution for this one life that they're going to get to live. These two solutions that we're going to be concentrating on in this conversation with you were specifically created though for this retiree demographic, and so they tend to be the most efficient way in a lot of cases for somebody in that age demographic to be able to monetize and utilize their home equity in an efficient way.
Now, that's great. I mean, being able to access funds that have extra income on a monthly basis and not have to pay any money extra above that is great. I mean, that changes people's thought process. Like, do I want to do this? Is it going to cost me extra money? Is it going to, so that's always important to understand that to relate to a client that it's not going to cost you extra money. We're going to help put income in your pocket so that you can use it however you need it. So that's really important to know, and it's great information. So who is eligible, and how much do they get, and how do these mortgages work?
Well, the good news is, as we've mentioned a couple of times, people 55 and older are generally eligible. Now, the 55 refers to the proprietary product, and it's state by state. Sometimes it's 60, but the FHA product is for anybody 62 and older who's a homeowner. And if there's a spouse or another partner in the mix, that person does not have to be 62, by the way. The three factors that we look at to determine how much somebody would receive are the age of the youngest borrower, the appraised value of the property, and the current interest rate. By the way, we see the average age as about 73. And the way they can take the money, let me add, is they can take the money that they're eligible for in any one of three ways. They can take the money as a lump sum. There are some restrictions, but they can take the money as a lump sum. They can take the money as a line of credit, which is actually the most popular choice, or they can take the money as a monthly distribution. So those are the three ways to take the money. I will say I once went to a closing and the gentleman said, I'm going to go to Atlantic City and I'm going to gamble. It's not something we recommend, obviously, but again, they can do anything they want with the money from the home equity conversion mortgage.
Probably not putting all the money on black and letting it ride is probably the best option when it comes to this money. So, so yes, that would definitely not be the way to go. So thank you guys so much for coming on today. I truly appreciate all this valuable information that you shared with us. I know this is a viable option for a lot of people that are looking for that help. And again, I want to thank you so much for coming on. We're going to go into another section. We're going to go into greater detail on this topic. So thank you so much, guys, and have a great day. Thank you, everybody, for joining us today.
Thank you.
Thank you, Kim.
Cancer, 16 rounds of chemotherapy, multiple surgeries, feeling alone, feeling isolated. Those are the things that I felt while I was going through cancer. Those are the things that someone is feeling today. One Tough Cookie is here to help.